I'd like each of the panelists maybe to take a few minutes to introduce yourself before we jump into the discussion. So how about we start with you, Farah?
Thank you very much, Abe. I'm Farah from Labuan International Business and Financial Center. It's Malaysia's Midshore Center. Really, my role as CEO at Labuan IBFC Incorporated is to gain better awareness about Labuan's offering generally, but specifically here vis-a-vis digital. So Labuan, a lot of people may not realize, has been around for 30 years. And we're basically Malaysia's foreign offering with regards to financial services. Thank you.
Fantastic. Vineet, over to you.
Thank you, Abe. And my name is Vineet. I've still recently the head of retail with Banque Misr here in the UAE. I've basically been a career banker, and take deep interest in how technology is shaping the future of banking. And very recently, I've moved on to, advising in the fintech space. So really looking forward to this discussion.
Wonderful. Thank you. Abhish?
Hi, I'm Abhish Saha. I'm the General Manager of Premier Technologies Merchant Suites Payments Business. And I've basically spent in my career both a lot of time on both the acquiring bank side as well as the fintech side. So I've seen both sides of the fence and the challenges and opportunities. And I guess in terms of what Merchant Suite provides, or what we provide is basically a business value-based omni-channel platform that services everything from government, retail through to SMEs. That's sort of our 1 minute spiel.
Very interesting. Thank you very much. Yaser, over to you.
Hi, everyone. Thank you, Abe. I'm Yaser. I'm the Chief Strategy Officer at the National Bank of Bahrain. I'm part of the management team that took over the bank about 3 years ago. And part of our remit is to transform the bank digitally and make it ready for the future. We operate out of Bahrain, Saudi Arabia, and the UAE. And I'm very delighted to be here to have this discussion with you guys today.
Wonderful. And last but not least, of course, Michael.
Good afternoon, ladies and gentlemen. I'm Michael James. I'm a career banker originating from London throughout the 80s, 90s. I've now moved over to Inpay, which is a Copenhagen fintech. We're all about making payments internationally easy. We want to make the business flow. We want to make sure that there's no friction with all the payments. And we're here to enable our corporate and FI customers make very efficient, speedy transfers around the world. I look forward to today's discussion with you all.
Wonderful. Thank you so much, everybody. Again, I'm really excited to have all of you, and I'm sure I'm going to learn a lot from you, and I'm sure we're also going to share some great insights together. So let me start off by posing a general question, for the group. We've seen recent articles about banking and fintechs and partnerships. We've seen a lot of effort that's been put in by various players in the ecosystem. And in some of these articles, they say fintech partnership is the future, while others refer to it as a fad. And I'd like to just maybe get your point of view on your stance on this. So how about we start with you, Farah?
Ladies first, is it? Actually, I would have said, and I hate using the C word, pre-COVID, that there is more of a symbiotic relationship. It's a mutual appreciation, sometimes depreciation society between fintechs and banks. And representing the regulator, we see a lot of that. We see a very different and very divergent ethos and philosophy from both sides, right? And in a lot of instances where there is a merger, where there is a coming together, it is for the lack of being able to organically grow. So the banking system is closed. The fintech community is unable to push through. And yet the bankers understand that there is a certain type of person, a certain mentality that's required in order to push this revolution. So what happens is that there tends to be this marriage. Sometimes they last, sometimes they don't. Sometimes they acquire, and then there is a philosophical conflict. Post-COVID, however, what has happened is that I think that whole digitalization has been really, it was already fast to begin with, but really it's now at lightning speed, right? So what's happened is that there is a lot more recognition for digital players that are not necessarily bank based. There is a coming, how do you say, there is a thinking now that maybe if there are certain qualifying criteria that are met by these fintechs, they will be allowed to play, as it were, in this space, yeah? And you're seeing it time and time again with payment gateways coming through, you know, banks being accepted as a proper, I use that word very liberally, proper bank. But also what is quite interesting from a regulatory point of view is that also there's this move, right? So OECD is now coming and saying, oh, we're going to have standards. The whole VASP issue is coming in, right? The whole issue vis-a-vis standardization and the seek and, you know, and how the players are seeking regulation. And so really, sometimes I feel that from a regulatory point of view, there is an onus almost by the regulators to ensure that both parties are able to either commingle or to grow independently of each other.
That's very interesting, actually. And, you know, on that note, I'd like to share that as of October 20th, a regulator did exactly that in Bahrain. And I'm going to ask Yaser to go next. But the Central Bank of Bahrain launched a digital lab, and it was FinHub 973. And it was exactly that, to really help that co-creation and collaboration. So, you know, speaking of Bahrain, Yaser, from your point of view, what do you see from, you know, in terms of bank and fintech partnerships, what's been happening with Bahrain and the central bank, again, of Bahrain being one of, you know, the leaders when it comes to that, but also from your experience even before MBB, if you will.
Sure. I think financial technology or fintech has been around for decades. Its latest iteration, I think, allows us to look at it differently. It's not an either or question of whether it's the banks or the disruptors. I think it's a time to think openly, collaboratively, and ways to benefit from one another. Financial institutions, as Farah mentioned, is a highly regulated or environment that requires high barriers to entry. And at the same time, there are new ideas and innovation that all businesses can benefit and learn from. And the fintechs need the financial institutions and their customer base to be able to thrive and grow. And as you mentioned, Abe, we're in a fortunate environment here in Bahrain because the Central Bank of Bahrain has been quite progressive in its approach and its outlook towards this industry. We recently launched our open banking framework. We were one of the first to launch a sandbox. And as you mentioned, we're excited to have the lab with FinTech Galaxy launched and looking forward to see what that births for us as opportunities and businesses that we could learn and grow with.
That's fantastic. Michael, what's your stance on the whole FinTech bank partnership?
So I believe that partnerships are definitely the way forward, right? It's the future. Customers these days have got so much choice afforded to them, specifically within the instant payment space, where they can go on the internet and find a range of different providers. Banks now need to, you know, pull their socks up and improve in this new digital world. And they've really got to adapt to the needs of the customer, because unfortunately most banks are built on legacy systems, built in the 80s, built in the 90s. They don't really have a nice front end. So we're seeing a lot of, you know, savvy consumers move their business away. So I really think that, you know, banks have got the customers. They want to work with the customers. They just got to give the customers the things they need, and therefore, you know, they can improve. This is almost a catch-22 from what happened in the telcos at the end of the last century, right? Telcos needed to adjust, and banks now need to adjust in the same way. So definitely, partnerships are definitely the future.
Very interesting observation on the telcos, indeed. Vineet, let's come to you. Let's hear your stance, your opinion on this.
So, you know, actually, Michael, Yaser, and Farah have pretty much, you know, kind of, you know, covered. But I just want to, you know, take a step back a little bit in terms of why are we even discussing this now, right? Why is this subject suddenly become important? And I just want to kind of exclude COVID because, you know, COVID is like all encompassing. It's kind of impacting everything. What has happened is there have been some significant shifts in the core business model of banks. And the way the banks used to really earn their money, earn income is shifting. So, here in the region, we are living in a very low interest rate environment. It's likely to continue. That has caused a big pressure on banks to look at alternative revenue models. The customer behavior is changing, and it's changing at a faster rate. So banks have to really almost be, catching up with them at all times. And, traditional banks have been very, should I say, not being proactive in terms of moving with how the customer moves, right? The regulatory framework is changing. The demands, that banks today have to comply with is increasing. So what's happened is now banks are starting to think, okay, if these are my challenges, how do I grow in the next 5-10 years? What's my best opportunity to really grow? And that's where fintechs come in, right? Fintech are, they're not a solution for all the problems that banks have, but they are definitely one of the most important alternatives that today banks are looking at. And then I go back to what Farah said, right? It is a symbiotic relationship, but it's important to pick the right partner. It's important to really see who you want to tie up with, right? Because it's, fintechs will come, they will give you this really fancy solutions and they'll come and say, we want to solve these problems for you. But as a banker, when I look at, these solutions, I have to go back to the drawing board and see what are my customers' problems, what are my real problems, right? And that's when I choose. But yeah, I mean, to answer your simple question, absolutely, that's the way forward. But you have to really pick and choose, who your partner is, going to be.
Very, very good. And we'll come back to that note on, how do you choose? So we'll come back to that question, but I'd love to also hear Abhish's view before we move forward.
Yeah, look, I think everyone sort of touched on most of the items there, but I think having sat in that chair many years ago, in the acquirer's chair, I mean, I had the issue of the PCI standards coming in all those years ago, and all these other requirements coming in, and as a bank, it was, one thing I had to think of is how do I grow the pie with all this regulatory and compliance coming in, and on the other side, as you said, Vineet, with the consumer requirements, you had these things called smartphones coming as well, and and the tech, the consumer tech is changing as well. I mean, how do I as a bank keep up with it? And as a fintech, we can move faster. We stay in line with what's required in market. And just from experience, to answer your question, is it a necessity or a fad? Well, I'm definitely in the necessity camp from over 12 years of experience in being in arrangements like that, between fintechs and banks. It certainly helps with things like time to market, as well as faster time to return on investment as well.
Wonderful. Going back to Vineet's question or point, I should say, it's really about also how do you pick the right fintechs? How do you choose these right partners? And I'd like to pose this question to Yaser to see also, since you guys took over MBB 3 years ago, and also being in an environment where the regulator is very proactive in cultivating these type of partnerships and making it available to you, how do you identify the right partners and the right fintechs to work with in order to deliver the business outcomes that you're seeking?
Yeah, that's a great question, Abe. So I think you need to start with the customer and the pain point, right? Identify what it is that you're trying to solve. And you need to look at what's going to set you apart and be able to deliver that value to the customer. Today in Bahrain, we sit in an environment and an ecosystem that allows us access not just to local opportunities, whether it's through the startups that are coming through Bahrain Fintech Bay, or many of the incubators or accelerators that have set up here, but also the bank has participated as an LP in Al-Wahid Fund of Funds, which gives us visibility through the different VCs and the developments they're doing all around the globe, and participating in different sessions and symposiums to get the know-how and knowledge. The challenge always is, do you go with the incumbent established player or the new startup that has the idea? And there, the criteria about the sustainability of the business to be able to continue to support you beyond this particular point, how much of their business is dependent on what you're going to give to them, and how likely is it that they'll be able to serve a wider space. So as you would look at any other investment opportunity, evaluate the the startup's ability to sustain itself and succeed beyond the solution that they're providing to you. And the interesting thing that we found is whenever we've looked for a solution, it forces as well the incumbent players, the traditional players, to up their game. So an example is we were looking for a queuing solution and a statistic and monitoring solution for our branches. And we had a local startup that had come up with a iPad-based, very user-friendly solution, and which was quite cost-effective. And that allowed us to get the incumbent solution for a quarter of the cost because they realized that their business was under threat. So, you know, you need to look at all the different elements that it can work and grow with you as you want to grow. And as a national bank, we have a responsibility to provide things that are sustainable and scalable. We can't tell the customer, here it is today, and it disappears in 3 to 6 months because the startup behind it can't continue with you.
Excellent. Besides sustainability, Michael, what do you think are some of the other criteria? I know we heard Vineet saying, you know, start with the customer. Yaser echoed that. Also the aspect of sustainability and continuing to serve the business. Any other criteria that come to mind?
So from my experience, when banks are shopping around for a fintech, the first thing they're looking for is security, right? Because banks are effectively putting their own brand on the line by partnering with a fintech. And if that fintech falls over, as Yaser says, you know, then the bank looks bad. The second point is we always see is customer service, because banks know what their customers expect. They understand what they need to deliver, and therefore they need a fintech that's going to, you know, do exactly the same thing. Someone that's going to be able to fix their problems, help them out when things go wrong, and give them, you know, updates on where the payment is. The third thing we see is quality of product. The product the fintech sells needs to do what it sells, right? Because we sell a lot of people these instant payment solutions, such as payments to the UK within about 5 minutes. And we have to make sure that the quality of our product does what it says on the tin. Because, you know, we have to make sure our product is constantly delivering, otherwise we'll get a bad reputation. Other things like costs, ease of connecting and flexibility also come into consideration depending on which parts of the bank you're speaking to. We speak to loads of different parts of the bank, the compliance team, the product team, the management team. So, you know, I think we have to get an overview, but I think, yeah, those are the main drivers: security, customer service, and quality, really.
Wonderful. Farah, over to you. Partnerships are often talked about from the perspective that they offer banks a lifeline, but they're also, as we've heard, equally important for fintechs, for them to reach that level of scale and trust that otherwise they wouldn't be able to have access to. It also offers them the ability to expand in new markets while benefiting from the regulatory status of a traditional player. What are your thoughts on this?
The way I look at it is like any other partnership, right? I think, you know, let's not overglaze it by saying this is digital, it's going to be different and all the rest of it. I think, to be honest, it is like any other partnership. There has to be pieces that match together somehow, right? I think the biggest, from our experience anyway, the biggest stumbling block is one party. Both parties come together, yeah, because they both have value to bring to the table. But what happens is that one party tends to overrun the other. And then that's when the value gets diluted. So it could be that the fintech gets brought in because they've got an amazing idea, you know, that the whole ethos is different. And then they get, you know, they get hammered down by the banks, as it were, and how the processes are done and all the rest of it. It's about balance. At the end of the day, it's about balance. It's about understanding that both parties bring something to the table and not over one party being overpowered by the other. And the reason, you know, I'm not anti-bank, obviously, but they tend to have the bigger balance sheet. They tend to have the bigger SOPs in place, that whole risk issue. And it can be very, very overpowering for fintech, right? And that's why I go back to what I said earlier. Right? The fact is, non-traditional banks are gaining so much recognition, and the regulators and the governments are helping, that the banks, if they don't kind of like take a stock check of themselves, may find that this partnership is no longer an important element for a fintech, right? And I know I'm speaking to banks here, but I think it's important to understand that there is a recognition, a very fast growing recognition of fintechs being a real provider, not just a patch through or a platform to intermediate. Like, some people say to me, what is the difference between a fintech and what they provide and a website, right? And it happens. It does happen. And, they don't understand that when a fintech comes in, the core legacy banking system gets diluted. And a lot of banks are not very comfortable with that, right? And there's a lot of pushback. And when there is pushback, the fintechs are going to say, well, you know what, I can get recognized on my own anyway. So, I think that whole balance is being readjusted as we speak. And I think the banks need to understand that. And as representing an entity that is owned by a regulator, the regulators don't have a problem with recognizing, for as long as the supervisory standards are there, the international global standards are there, there's the EKYC, there's the AMLA, AMAPUA, all the boxes are ticked. It's a new landscape we're looking at.
Very true. Vineet, I know, being also, ex-head of retail at Bank Muslim and a career banker, what's your perspective on this?
Abe, actually, just to take Farah's point forward, I've recently started, like I said, working with some of the fintechs in the region. So I kind of, moved to the other side. And, really the real reason behind, why fintechs are even approaching banks, is today the regulations, for some of the business models necessitate that fintechs have to partner with banks, right? One reason is really that they today don't have a choice, so they have to work with the bank. But there are other genuine reasons why a fintech would want to partner with a bank. The most important one, I think one of the panel speakers spoke about, is trust, right? Now, I'm a startup, right? I, as a customer, I don't know your brand, right? I don't know what's behind you. But the moment you associate yourself with a strong brand, everything else is taken care of, right? So for me as a fintech, it's important that I associate myself with a strong banking brand in the region. And I say region because of scale. If you partner with a bank that is local, in one country presence, it's not going to help you because, by definition, a fintech business model is based on scale. And so I've seen, some of the fintechs primarily targeting banks that are at least commit to them, saying, okay, you know what, you are present in 8 countries in the region. We need to be jointly, partnering at least in 5 or 6 of them, so that it helps them. So trust and regional presence are 2 important reasons apart from the regulations that make banks, fintechs partner with banks. And the last is the risk and compliance aspect. So, as much as, fintechs are governed today by, the various incubators and the regulations that are in scope, they still can't compete with the kind of risk and compliance embedded in large incumbent banks. And so what that does is, it again goes back to, gives comfort to the customer himself, right? I'm happy with the kind of data security or data privacy that these banks handle. So I'm sure, in this partnership also, those things are going to be taken care of. And it also helps the fintech because, it gives them that level of comfort that they can go out and source customers saying, I have this large bank at the back of me. So don't worry, if your data is protected, everything is safe, use my experience and start this relationship. So I think these are the main reasons why, fintechs really also have to look at partnering with banks. And just my closing comment is, eventually there will be a position that will come where, fintechs will essentially, completely be on their own, right? I'm talking about the successful models, right? I'm talking about the successful business cases. And they will say, we have reached a certain scale. We have that credibility. We have built that infrastructure. Thank you very much, Mr. X Bank. It was lovely working with you. Now we go on our own, right? And that is going to happen. And that's what that's like a warning to the incumbents that do not just take this fintech partnership as being the larger player and, there will be a time when they will be, you know, competing with you as well, not just partnering.
Very interesting point there. Thank you, Vineet. Abhish, being on the technology side, we see that legacy systems within banks can potentially be a barrier to the partnership, and it may, often make a bank hold back because they, like, Farah mentioned, it dilutes their internal mechanics, and it makes them feel uncomfortable. And I'd love to get your opinion about, the concept of open banking and open APIs, and how that could be a viable option to overcome some of these potential barriers.
Yeah, look, I think, firstly, in terms of legacy systems and things, I mean, a lot of the, I guess, selection that the banks should go through in the picking a fintech is one that's actually able to reduce the overheads there, to be able to take the value of the legacy system and bring it to the new domain. And that's something that we found over the years. You sort of take something that was built in the 70s or 80s and treat it like a black box and take the value out of that and bring it to the digital age. So that part of the partnership is quite important. Things like open APIs, again, the open API again will rely on something that's sitting in the back end that's of legacy as well to limit it. So it can open up, for the call it a plethora of applications, linked to legacy systems or the bank's core banking systems. But at the same time, it's the controls around it. So, to Mike's point, the bank's putting their brand on this, and brand is everything. And when it comes to handling people's money, and with the open APIs, who's accessing it, what are they doing with the data? Is it limited? Where's it going? Right. So all these things start to come into play. So yes, they are an option, but they're also a Pandora's box that opens up a lot of other considerations.
It's very interesting. And, I'd love to hear Yaser's view. Yaser, in fact, this morning I was on a call with your team from MBB and VISB, and we were talking exactly about this, about open APIs. And, I'd love to hear your perspective because, again, Bahrain is a great example, and MBB is a great example of a bank that, they didn't have open APIs or open banking. Then it was mandated. Then, with, the whole work that happened with Tarabut Gateway, it became a reality. And I'd love to hear your perspective about some of the challenges that the bank may have encountered and some of the learnings that you can share with the panel and with the audience.
Yeah, so, when we started to plan the bank's transformation, one of the first things we needed to look at was challenging the business model. So the design of the operating model, the business model, how we are going to approach things going forward needed to change from how things had historically been done. And it started with the basics, right? We looked at, as many of my colleagues here today mentioned, the legacy systems, the core banking. Does it need to be replaced? What are we going to replace it with? Redesign the whole architecture of the stack within the business to enable us to be an active player within the ecosystem. It was important for us also to change the way we approach things and manage things. So it was important to introduce agile methodologies to train people and make them understand and get the different stakeholders within the bank comfortable with the fact that we're not going to go through a waterfall step by step for something to go out. That there is a level of risk involved. We know what it is. We know how to manage it. So compliance need to be comfortable. Legal need to be comfortable. Finance need to know what their bit and how it's going to be impacted. So it's a lot of shifts and changes, not only in the technology, but also in the mindset and approach and the training of people. And it's important for us to do this right, because if you're able to set yourself up as a platform, then the risk of the fintechs getting to the size where they'll say, I'm big enough and I don't need you anymore, becomes less of an issue. And it's important that you become a relevant part of the ecosystem, because that's where the partnerships and the collaboration thrives. And at the end of the day, that's what your customer expects. So whether you want it or not, or are open to it, you're going to be forced to do it. And I think open banking has been a phenomenal enabler in all of this, because it puts the value where it should be, with the consumer, with the customer. And you as an institution have to respect that, as you have respected their money and their wealth, and you've been a protector of that. And it also forced us as the National Bank of Bahrain to also look at how the impact of new regulations when they come out. So open banking, and historically, if the central bank would approach the bank and say, we want to do this, we'd go and look for extensions, and why are you pushing us to do it so quickly? And we said, no, we want to be the first to be open banking compliant. And we need to do it and prove, not just say we're open banking compliant, but also give customers something tangible that they could then experience open banking through, which was the aggregation service, account aggregation service. So it's been phenomenal, and it's an exciting time, and we're looking forward to further development, further challenges, and working together with other stakeholders to continue this journey.
That's amazing. It's actually very interesting, even working with some of the other banks, they always reference MBV's aggregation service as being one of the first and definitely delivering value. On the topic of delivering value in the context of fintech partnerships, Michael, I'd love to get your perspective on how fintech partnerships can be a viable option for two things. One, reducing costs, and two, accelerating time to market when it comes to delivering innovative solutions.
So that is the $1 million question, as I like to call it.
Indeed, indeed.
Right. So same as home. Why pay more than you need to? And that's currently the situation we're in. So we're living in a cost-cutting world. Many banks are very much showing no regrets, specifically after COVID, trying to save some money, keep their investors happy, and cost savings are a major driving part now in what we're trying to do. From a swift transfer point of view, making international payments, comparing that to the domestic system, it's worlds apart. And we're trying to empower banks to bring their costs down, right? If they bring the costs down, they make their customers happy, and then their customers don't go on to the big, well-known fintechs to move their payment business elsewhere. They can compete. And obviously these reductions in costs are great. The banks can use them for themselves. They can pass them on to the consumers. And many of our customers are actively selling themselves on the lowest fees to Europe proposition because they want to empower their customers. They want to keep their customers sticky. As everyone says, they don't want them running off to a fintech who's ultimately going to take over their account, take over their mortgage, take over their financing, because banks will get disintermediated. So I think, yeah, cost cutting is really key, specifically now, this end of this year. And obviously, banks need to continue to be profitable.
And what's your view, and maybe actually I'll get Vineet to contribute to this, on the whole aspect of accelerating some product innovations to market through the fintech partnerships?
So my view, just to jump in, here's the classic analogy. Banks are like the oil tankers of the ocean, very strong, very robust, going along very nicely. And they take a long time to turn direction, right? Many miles. The fintechs are like the speedboats, jumping over. They're born to be fast, and they're happy to fail. Some things they do doesn't work out, and they don't mind. They find something that works, and they do that. So from an innovation point of view, the fintechs are there to help banks produce products that the banks want, and they do all the product development. And when they work, they come back to the banks and say, "Look, I've got this for you. You'd like this. Your customers will want this." So I think that's the opportunity that banks have got if they want to partner with the fintechs.
I love that analogy. Thank you for that. Vineet, what's your perspective on that as well?
Right. So, I absolutely agree with Michael. The analogy is absolutely perfect. I think from a bank's perspective here, it's not so much a question of can fintechs help banks innovate product. I think banks know that, the kind of innovation or product innovations that fintechs can bring is definitely a lot more and a different level than what typically incumbents would do. To me, it's more a question of the strategic alignment between what exactly is the bank trying to do, and where does the fintech or their innovation comes in, right? Because today if you look at the whole ecosystem of fintechs, you have fintechs on payments, on lending, on regulatory, regtechs, insurtech. You have everything on the table, right? I mean, as a banker, if I really want to innovate, I should just, I should outsource my product team to all the fintechs and say, okay, I don't need to think about any product development. But it's easier said than done, right? Because there's, of course, it leads to too much disruption, and we know as human nature, we don't really like disruptions, especially, a banker. So I think, it's more a question of, strategically, where is it that I really want to make my play, right? Am I going to look at fintechs purely to get more customers, right? So you look at fintechs that are, neobanks, going to originate customers for me. Am I looking at just improving customer service for me, right? And so you look at, fintechs that are going to help me, improve that. Or am I looking at, cost cutting, like Michael mentioned, which, automate my, mundane processes, have chatbots to kind of, lower costs at customer service. So it all depends on what the business case is for the bank, and it cannot be, all, fits into one bank, and banks cannot, work with all fintechs at the same time. So it's going to be a graded journey, right? And banks will have to prioritize it. But, my opinion is, and I've been a product person in traditional banking, and, when I talk to the product people today in fintechs, I think, what was I doing? So it's completely different, right? So innovation necessarily will come, from fintechs, and that's really what they're good at. So why, as a bank, why should I even bother trying to figure out, what is it that customers today need and how I can innovate? I need to figure out what strategically is important to me and then go and get the right path.
That's amazing. Abhish, anything to add to that?
Oh, look, I think, in terms of costs, definitely. I mean, if it's a new entry to market with functionality, I mean, think of all the capex you save from taking something from another market and bring it into yours, or taking from a competitor even, right? So to catch up, but there's definitely cost savings from a capex perspective, from a P&L perspective, time to market and time to profit effectively is also a lot quicker, and then that's time and time over and over as a fintech. That's what we've done, and I see that's a key benefit. With minimal risk. If it doesn't work out, as long as your brand is still intact, you can still exit. As a bank, without too much damage on the balance sheet. So.
Excellent.
Yes,
Farah, being the only regulator on the call, I'd love to get your perspective, on the role of the regulator in facilitating the whole partnership between digital and legacy, between fintechs and incumbent banks.
I think our counterparts in Bahrain have done a fantastic job. Really, I visited the FinTech Bay when I was in Manama last year. It's fantastic, and really the kind of collaboration that happens is real. It's not a tick the box collaboration, and so kudos to them. It's fantastic. With regards to facilitating partnerships, I think the best thing a regulator can do, and I don't speak on behalf of the regulator because I'm a subsidiary of the regulator, to be clear, but I think what our experience has been is that we're open for as long as we remain open to both equally. That's the best thing we can do, and let the market find, water will find level, right? That's one thing. So the ethos has to be vis-a-vis the philosophy of the regulator has to be very much like the Bahraini approach. Us in Labuan, we're very similar. We license live, right? We license live, but we don't dilute the requirements. If you're able to meet the requirements, because we're completely a whitelisted jurisdiction, we're part of Malaysia. If you're able to meet the requirements, we don't discriminate. And I think that is the most important thing vis-a-vis a regulator, the ability to be open. Now, to go back to the earlier discussion, it was very interesting because everyone's talking about fintechs, right? But when I look at it, fintech is a collapse of existing protocols. Why are we not talking about DeFi? Why are we not talking about the complete disintermediation of financial services, right? That surely is that next stage, right? And as someone, a completely non-banker, you know, never been a banker, always been in capital markets, it's always been very interesting to look at the commoditization of banking, investment banking, by by technology, right? And I think that's the way forward. If we start looking at fintechs, yes, all great and good, but really what we're looking at is a complete rework as to how we serve the market, right? And I think that's where the real challenge is going to be.
That's amazing. I would like us to wrap up maybe with any final thoughts. So very quickly, I'd love to see, Yaser, do you have any, like if there's, you know, one key message that you would like to leave the audience with, what would that be?
Yeah, I think Farah made a very critical point, which is the role of other players in the space and the importance of convergence. And I think that's really where we need to focus. I think that security is critical. This whole relationship, the success of financial institutions was built on trust. And that's something we need to continue to maintain and develop. But we need to go beyond what we're doing ourselves. It's just not forgetting that we can't do everything ourselves. It's just getting the right partners to deliver the value to the customer at the end of the day.
Excellent. Michael, any final thoughts from your end?
So as I say, banks have had the trust of customers over hundreds of years. Fintechs don't have that rich history yet, okay? And it's going to be a while before they do. So by helping banks, the fintechs can develop their products. And ultimately, you know, my bottom line is collaboration beats competition. And if they collaborate, they both get a win-win.
Excellent. Vineet, final thoughts.
I think my thought, you know, is probably more focused on, you know, the region, UAE specifically. I think the fintech ecosystem is evolving. You know, I think UAE is, along with Bahrain, you know, are kind of leading this in the region. And this is a journey. You know, we don't know what shape it's going to take, how long this journey is going to be. So my, you know, suggestion, or, you know, my thoughts are, the ecosystem will need to evolve. All of the players, and it's not just, actually, it's not restricted to banks and fintechs, right? There are corporates involved, customers, governments, regulators. We all have to pitch in together and really find what it is, you know, is the right role for financial services. It's not just about fintechs here. You know, fintechs are just a player. So the whole financial ecosystem is going through a transformation, and we don't know really what shape and form it's going to take with the way technology is evolving. You know, it's hard to predict what's going to happen, you know, 1 year from now, right? That's how fast it is. But we're on the right path. I think the fact that we're having more of these discussions, you know, it gives me comfort. It gives me confidence that, you know, that we are in the right direction. You know, we're looking at, or we're trying to use technology for the benefit of the customers at the end of the day.
Very good point. Abhish, any final thoughts from your end?
Oh, look, I think having heard everything that's being said today, I think one of the most important things, I guess, with you know, the fintech banking partnership is making sure that, you know, as long as the business model that they go in together with makes sense for the end consumer, be it the you know, the retail customer or the corporate or government or whoever it is that you're trying to pitch towards. It has to make sense there, and that's the recipe for success. And I think the other part is, you know, don't regulate the fintechs to death. You know, as a Farah's point, because that will take us back to where we were before. You know, to take the, you know, the financial industry backwards, and you know, allow for some of that innovation to happen with collaboration, both with end users, banks, and fintechs. Yeah.
Wonderful. Well, you know what, we're at time, and I would love to carry on this conversation longer. This was very informative. Thank you so much, Farah, Yaser, Michael, Vineet, and Abhish. I hope our audience will also find this quite valuable, and thank you for the Seamless team for having us, and we'll be sure to be talking to you again very soon. Thank you again.